Market structure. Market structure can be defined as the skeletal movement of price. Types of market structure. We have two types of market structure. We have the macro structure and we have the micro structure. The macro structure, which is also known as the big structure or the major structure. These are structured on the higher time frame based on your personality as a trader, your person. Are you a day trader? Are you a scalper or you're a swing trader? We also have the microstructure, which is also known as the small structure or minor structure. These are structured inside the macro structure, but they are much more visible on the lower time frame. Laws of market structure, which is the laws of market structure, we have price will continue to be in an uptrend if price keep breaking its highs. Price will continue to be in a downtrend if price keep breaking its lows. Remember these laws that guide the body of market structure. Price will keep breaking an uptrend if price is in what? Is in an uptrend, which means price will keep breaking its highs if price is in an uptrend. Why price will keep breaking its lows if price is in a downtrend. When I say based on your perspective as a trader, your person, either you are a scalper, a day trader, or a swing trader. For swing traders, their macro structure is on monthly and weekly, while their micro structure is on daily and H4. They don't trade on the microstructure. The microstructure are just structure which they are looking that market might either react on those points. So they will be like, okay, should I take out if they are already on a trade on the higher on the major structure, if they are already on a buy or a sell on the major structure, they will be like, should I take my trade from this point or from this point? Let me give you an illustration. If it moves this way, if this is your major structure and you took an entry for a buy from this point, on your microstructure you will see something like this inside the major structure. This is your entry. This is your entry, and this should be your first take profit. Then this is your second take profit. So you'll be like, okay, if the market is in and on your microstructure you see something like this. So if the market get to this point on your microstructure, you will see some reaction. In most cases, market might react off this level and what? Retraces back. While in most cases, market might break this level and keep what? Moving to the upside. But there are some kind of candlestick pattern you will see on this zone which will makes you close out on this zone based on what is happening on what the microstructure. That is what microstructure is used for. It's like a point. If market gets to this point, if you see some kind of reaction, you'll be like, okay, should I take my profit off this place or I should hold? The pattern that will be created within that zone is what will tell you to take your profit on that zone or you should stay hold. You understand better, we will go to the chart. Why on as a day trader, your macro structure is from daily and H4, while your micro structure is H1 and your entry is on 15 minutes and 5 minutes. While for scalper, their macro structure for scalpers, their macro structure is from H1 and 30 minutes, while their microstructure is 15 minutes, and they take their entry on 5 minutes and 1 minute. These guys, they just want to enter the trade in few minutes and hop out from the trade. I guess you understand. We have the bullish structure, which is the upward movement, then we have the bearish structure, which is the downward movement, and we have the sideways structure, which is what the ranging market. We have each and these are what makes up what structure, which is the highs and the low. In just as we said earlier, in an uptrend, market will keep what breaking its highs. You see what market is doing here? It keep breaking its highs. This was the recent high and what recent low. But when market get to this point, it breaks what its high because what is in an uptrend and created another high here. And when market get to this point on this range, market what breaks its high, and this high what now becomes what the previous high, and this is now the recent high. So market will keep what breaking its high. It is in an uptrend is made up of higher highs and what higher lows. You see what your low from here, high, higher low because this low is higher than the previous one, and higher high because this high is higher than the previous one, higher low because this low is higher than this previous one, then higher highs. What you should expect next is what a retracement to this point and then boom again. So this line you see here is called break of structure because this was the recent high, and immediately this move break this high. This high now became what now becomes what the previous what higher high and created another recent high. So the break of this previous high is known as what break of structure. The break of this previous high is known as what break of structure. Just as you see here, the break of this previous high is known as what break of structure. While the retest of this previous high is known as what break and what and retest. You understand? Then we have what we call the impulse move. Then we have what we call the impulse and what correctional phase on what on the structure. We have the impulse and correctional phase. This is known as the what correctional phase. Remember, market always move in fractals. Market does not move in sideways movement like this. If this was to be Lagos and this is Abuja, if you are leaving, A represent Abuja, then L represent Lagos. If you are to leave Abuja to Lagos using the way forest work or the way the chart works, this is how your movement will be like this. You almost get to Abuja, then you will retrace back again to this point, something like this, then before moving to the upside, and then finally Abuja, Lagos. If you are to leave Abuja to Lagos, this is how your movement would be. But on the normal way from Abuja to Lagos, like when you are using air just like this, you understand, you have to just move straight. But market is not designed so it moves in fractals. So that's what you see here. So this is a correctional phase. It has to correct the movement, retrace it back, and then what? Impulsive moves to the upside, and then correctional phase, and then impulsive moves to the upside. With the same thing here, this is what impulsive move, correctional phase, then impulsive move to the downside, correctional phase, and what impulsive moves to the downside. You already know what is what break of structure, which is the BOS, and on the downtrend, which is the downside movement on structure, it is made up of what highs and lows as well. Then we have what higher lows and what lower lows on what the bearish movement. So if this is your high, if this is your high, then this will be what your higher low, because right, if you can either see higher lows or lower high, they are the same, higher lows or lower high, which means this low is what lower than this previous high, which means this high is lower than this previous high, so it is called what lower high or higher lows. And this recent high it created is known as what the recent higher lows now. So it is what lower than what this previous high. So this is what for the low side, this is for the low, and this part is for the high side, just as this part is for the high side and this part is for the low side. So we have what If here is your low, then we have what? Lower low, because this low is lower than this, and the next one is called what? Lower low as well, because this low is lower than this. Why on the sideways movement we have what? We have market tend to give you what? Equal highs and equal lows. So on this part we don't have what we call impulsive and what? Correctional. It's just moving what? Giving us equal highs and what? Equal low. Why on, if this is how your major structure is, if your major structure is giving you double top which and double top bottom, which is equal highs and equal lows, on your macro structure you might see a what? A structural move, either an uptrend from here on your microstructure, and what? A downtrend here on your microstructure. So remember, the bigger structure always what? Has more power than the microstructure. That is why you are advised to take your entry from what? The major structure, which is known as a bigger structure on the higher time frame. These are structures on the higher time frame based on your person or your perspective as a trader. If you are a day trader, for me, I am a day trader, and my major structure is always from daily, and most time I take weekly as my major structure as well. Most time I take it from weekly to daily and to 4 hours. Why that? Those are the points where I take what? My entries. Why my microstructure is what? 1 hour, and my entry is on 15 minutes or 5 minutes. Avoid trading correctional moves and focus more on impulsive moves. Meanwhile, there are some strategy that gives you an edge to trade to trade correctional moves, and there are some strategy that give you an edge to trade what? Sideways movement, which is the range of the market. But there are some strategy that only give you an edge when trading what? The bull trend or what? A bearish trend. So that's why you are advised to what? Trade what? Impulsive move and avoid trading correctional moves. Because impulsive moves is where you will get what? The big moves. Impulsive moves is where you get the big moves. While correctional moves are always what? Small moves. You can see, if this is your impulsive move, from this point to this point can be, you might get 200 pips or 400 pips. Why the correctional phase from this point to this point will be like 50 pips, or probably most of the time 10 pips, 20 pips or 100 pips. You understand? But the impulsive moves is where you always what? Cash what? The bigger what? The bigger pips. So focus more on trading on trading impulsive moves, and what? Avoid trading correctional moves. But if you've mastered your strategy, and you know that your strategy still give you an edge on correctional moves, or you know when to up out and up in, even in a correctional moves, you can as well trade it. But I will advise you to stay away from what? Ranging market. That's it. Now let's go to the chart. Before identifying the structure on the chart, let's do a textbook template of what? Market structure. In an uptrend, this is what you see: low, high, lower high, higher high. This is what we see in in an uptrend. You always see what? This is known as, let me label it so that you understand it better. This is it. It's always made up of low, high, lower high, and higher low. Okay, this is the low, this is the low, and this is the high, higher high, lower high, lower high, higher high. Higher high. This is template of what? An upward movement, which is on market structure. This is it. We have what? Our low here. Let's bring this here. The low. You can see. This is the low. This low gave birth what? To this high. And this high gave birth to this what? Lower high. You can remember low. This current low is higher what than this previous low. That is why it is what called the lower high. And you can see high. This current high is higher than the previous high the market has created. That is why it is called what? Higher high. And this is what? Lower high. This low is higher than what the previous low. So it is called lower high. For the upside is known as what? The high, while for the downside is known as what? The low. So you can see this current low is lower than the previous one, so it is called what? Lower high. And this current high is lower than the previous one, is called what? Higher high. Higher high, because what? It is what? Higher than the previous one. And where is the correctional move here? This is the what? The correctional move. From it moving from this high to this point is known as what? Correctional. Then what? Impulsive move. This one moving to the upside is known as what? The impulsive move. While coming down is what? Is correctional, coming to correct the movement before what? Pushing to the upside. Remember, if something is moving down, it's what? It got to gather momentum. If the plane were to kick up to the sky, it will spend some time on the ground because it needs to gather momentum before what? Ascending. So it is the same thing with here on forest. It will have to break down a bit to gather momentum before what? Spiking, or before the impulsive move. So now let's mark our break of structure. This is what our break of structure. This is known as break of structure, which is called BOX in forest. BOX, break of structure. BOX, break of structure. You can see break of structure, break of structure, break of structure. This is what? High that created this low, and what? Immediately the impulsive move breaks this high. It is called what? Break of structure. It is called break of structure. You can see it breaks what? This current high. Now it is called what? Break of structure. Move to the upside to create what? Another high that is higher than the previous one, which is called what? Higher high. And they came back will give us correctional move to test this previous move. You get it? So correctional move to test. In most cases, it does not test it. In most cases, it will end here before what? moving to the upside, while in most cases it will break this place and get to this point before what moving what to the upside. So as it moves here, come back to retest, is called what break of structure. Because why is it called break of structure? It has broken the high, the previous high it created. And see what it did here, the previous high, this one has broken it. So it is called what break of structure. And what broken is called break of what structure. So this is called the break of structure because it has broken the previous high it created. So it is called what break of structure. And this is called break and what retest. This correctional moves what that came back to, it came back to retest what this previous high. So break and what retest, then what the impulsive what move. Now on downtrend, this is what you see on downtrend. Create a high, give you a low, then what? Higher low, then what? Give you lower low and higher low. You can either say higher low or lower high, whichever way you get it. So now let's, please pardon my structure. Now let's label it. We have to label it so that we understand it better. High, low, higher low, lower low, lower low, lower low, higher low, higher low. So you can bring it. Yeah, this is the low it created. Then this is the high, higher low, lower low, lower low, lower low, higher low, higher low. You understand? So this is what the impulsive move to the downside and what correctional moves. Impulsive move to the downside, correctional move, impulsive move to the downside, correctional move, impulsive move to the downside. Then what you should be expecting is from here what correctional move to this place before what dropping down. This was the template of it. And to mark out your what your BOS, which is break of structure, this just how to mark out your BOS, your break of structure. There's no need to label it because you already look at it here. There's no need to label it because you can see it here. BOS, which is this BOS, BOS. Let me bring one down to this place. So breaking this point is called what? The break of what? Structure. It is the opposite of this up movement. So that gave birth to what? This down movement. Then if on a ranging market, this is what you will see. There's no need to explain much here because I've already explained everything here. It's the same thing, but the opposite of it. So this is what the impulsive move, the correctional move, the impulsive move, the correctional move, the impulsive move, correctional move, impulsive. Whenever you see market coming to the downside, after you've marked out this your break of structure, market has broken it. What you should be expecting next is that market should come back to retest this place and what before moving, which is create market will surely create a correctional move before what tanking down. Create a correctional move before what tanking down. So you should sell at the end of the correctional move, then what buy also at the end of the correctional move. Why in a sideways or a ranging market, this is what we see. You will see the market doing like this. Equal high, equal low, equal high, equal low, equal high, equal low. There are some strategies that equal high equal low. This is it. This is it. Equal high. You can see market is respecting this what, this resistance level, and respecting what, this support level. You understand what is resistance and what is what support on the next class. So you can see how market is respect this resistance level and what support level. So market keep what, retesting it high, come back to what, the retest it low, go again. So it's called what, a ranging market. For this place, you don't have a break or structure. But if it's in an uptrend, if this is what, a major structure, which is known as the macro structure, you can see what, microstructure here. Yeah, in that microstructure, that is when you will have what BOS on this ranging market. But if it's a major structure, like you see it like this, remember market always moves in what, in fractals. So you can see there's no impulse, no correction. I just what, respecting what, its highs and respecting what, its lows. Then there's one thing you have to know is that market can still be in an uptrend and what, fail to respect its what, its trend. Like remember, you remember we this is how market moves most of the time. You can see. So we are told how to, you have to plot your what, your trend line before what, to identify the trend, right? But market structure is the cocoa. Trend line is just a tool used to identify the trend. But if you can understand market structure very well, you'll be able to tell if market is really in an uptrend or market is what has changed its trend. Is not the trend line. Trend line is just a tool to just identify the trend. So if you plot your trend line like this, plot your trend line like so, you can see, okay, you identify if the market was here, you identify that we have what, one touch, two touch, which is, remember, if you have one trough and one touch of two, where of a trough, two touch of a trough and two touch of a peak is what, a valid trend. Now we have what, one trough, two trough, so it's valid. But on this page, you can see market has broken it, which is known as what, a trend line break. You understand? So, but that does not mean that the market has changed its trend. No, that does not mean the market has changed its trend. The reason be that if you label here, if you label here your lower high, here your lower high, so the market created this what, this structure, this correctional move. But the market what, has not what, broken its low. Remember, we are told that market will keep breaking its high if we are what, in an uptrend, and market will continue to break its low if we are what, in a downtrend. But see, in this uptrend, market what, has not broken its low. It only break what, this trend line too, which you use to identify this trend, So, but market has what not broken its what its low. So that's to tell you that the uptrend is still valid. The uptrend what is still valid. So it only came back to what to create another low here, push again, but it failed to break this side, came back, but still market what has still not broken this its what its low. If you check now, market has what not broken this its low. So this uptrend is still valid. Market is just giving us, remember, market moves in fractals. You see, then before market what finally what came to break what this high, and now that makes what this high now give birth to what this low, and this low now give birth to what this high, not this low and not this high, because what this previous high is higher than these two high here. So this is what the valid high, and this is what the valid low. Why this is the valid low is because this low is lower than this one. So this is what the valid. Okay, let's just plot it so that you understand it better. Higher high, lower high, higher high, lower high. This is it. This is the higher high, and what this is the current what lower high. So now market pushed down, but market has not broken this its lower high. So that's what you see. That's make what the uptrend still valid, even though it has broken this trend line. But the uptrend what is still what very much valid. And see what market did again. Came back, retested here, then pushed down. A lot of people will be like, but market has retested now it has still pushed down. But the uptrend what is still what valid. So everything market is doing here is what called the correctional moves. It's called the correctional move. As we move on, you understand how to what to know if the market is what is about to what change its move, or if the correctional move is about to end. I wish you get to understand it better. So market came down again, created this, and what pushes up. But this high is not higher than this one. So this high is what yet not what a valid higher high. And see when market what came back, it created this, and this low is what is not lower than this. So that's make this low the current valid one, because this low is lower than this one, and this low is lower than this one. So this higher high gave birth to this low. Then what that brings this one here, lower high, lower high. You can see it does not respect the trend, but it does not respect the trend line. That does not mean that market is still what not in an uptrend. When you plot your trend line, you can see it does not respect it, but that does not mean that market is what is not in an what in an uptrend. So then this lower high gave birth to what this high as we move on. So then what that's make this high what a valid high, and this high give birth to what this low, and this low give birth to this higher high, and that makes this higher one high valid. But the next move that came back to this point, this which is this one, broke what broke this low. You can see it broke this low. Then now this low what has been what invalid, has become what an invalid low. This low has become an invalid low. And what is the current low? This is the current low. And this is now what the current higher high. This is now the current higher high. Because now this low gave birth to what this high, and this high is what gave birth to what this low for now. So then we change it. So as we envelop, so this will now be our current lower high. And mind you, why it's our current lower high? Because it's higher than this one. Then the market pushes up to what to break this high, and now market give us current higher high. So then the market came back again to break what this low. Market came back to break this low, and there is something to be like, what's the market doing? That's to tell you that you should be what vigilant on what the market is about to do. So the market came backward to break this low, and we have what, a low here. Okay, and see market pushes up again, and market refuse to break this high, and market created what, another what, low, and market what, pushes up to create equal high with this one and refuses to get to this point. So, and what did market did? Market what, came back to break this low and break this low. That's to tell you that market is about to change its trend from what, being an uptrend to what, a downtrend. Because why? Market has broken two times low. So for me, I use, if market break two times low, I will say okay, market has what, finally what, is about to what, change its trend. Why some people wait for market to break three times low, why some just wait for market to break one times low. But for me, I wait for market to break two times low, like take this low one, then take this other what, low again. You understand? So market create equal high and what, low here. Then what, this one break this low and break this low. So that makes this one the current low, and this one equal high, which is what, let's just say okay, the high, which is the current high of the market. And market give us this low and what, pushes up to create another lower high here, or higher low, came back to what, give us one lower low. So this is it. Market will give us what? This is the high. Remember, it is equal high here. Then let's just use this as the high. The market created what? A higher low, and what, give us what? A current what? Low that is lower than this one. You get it? So this what, the lower low. And market what, pushes down again to give us what, another what, lower low, before coming back what, correctional move to what, to gain its momentum before pushing to the downside and give us what, a higher low after gaining its momentum, and then push down, impulsive move to what, create what, another what, lower high. Remember this one, lower high, a lower low, and pushes down to create another lower low before what, correctional what, to gain momentum to pull down and what, created what, another higher low. Then before what, this what, impulsive moves that break what, this lower low, and to give us another what, lower low. This is what the template of what, market what, structure. Now we are heading to the chart. So let's go to the chart where we will mark it very well, uptrend and what, a downtrend, and what, identify the change of trend. Now let's mark out our what, structure on this what, H4 time frame. This H4. So you can see what, this what, a typical example of what, a downtrend. You can see an example of a downtrend. If you plot your trend line from this point, this peak down to this part, you see what, market is what, a downtrend. You can see first peak, second touch of the peak, then pushes down. But let's plot our what, market structure. This is it. This is our high. If we pick this as our high, then where will be our low? This will be our low. Then what, correctional what, move what, which is high. Then this is it. Let me plot it. Where is this, my two patch? High. The network is lagging. If this is our high, then where will be our low? This will be our low. Then we'll, you see, break of what, structure. our high, then this is our low. The market what created this correctional move, then what pushes downward break of structure, which is BOS on the chart, is on chart, break of structure. The market came back to create this low and gave us correctional moves, which is what lower low, this lower low, correctional move toward give us what a lower what high. Remember, this is a lower high as well because this high is lower than this one, so lower high. The market came back to what to give us what another what lower high here, and came back to give us a low here and pushes up again to give us what a lower high, which is correctional, before coming back down to this point. You can see this low is lower than this what lower high that the market created. So this low is lower than this one. So these are our what current lower low. These are current lower low, and here will be our then give us this correctional, this one higher low. Then the reason why I said this should be the higher low is because all this high is what this high is higher than all this high it created here. So remember we said what we have what a micro what structure and what a major structure. So this in 4 hours is known as what major structure for the day traders. So all these ones you are seeing inside, they are called what the micro structure, which is structure inside structure. If you go to the lower time frame now, the lower time frame, or the microstructure will be clearly visible, will be clearly what visible. You can see. So then where will be our next what lower low is this point. This will be our next lower low. This point is our next lower low. Then where will be our next higher low is this point. Because why? This high here is lower than what this what high. So this should be our next what higher low. Then where's our break of structure? This is our break of structure. You can see if you bring this to here now, place it here. You can see this is our what break of structure. So then where will now be our next lower low? If you push it down, this will be our next lower low. This one will be our next lower low. This is our next lower low because what it is lower than this, not this one. The reason why I said it's not this one because it is this low that gave birth to what this high. You understand? This the high that this low gave birth to is this one, and the high that this low gave birth to has broken this what this high. That is why this is what our next what higher low. You can see this is our next higher low. Why? The reason why is because this high is what lower than this one. Then where will now be our next lower low? This point. You understand? So then this one came to create what equal high. Equal high. The high it created is equal with this. It came to create equal high, and what pushes down again to create. If this is our lower low, you can see what market did. It came to what to create what equal low before moving up. So it came to create equal low here with this equal low, then what then pushes up to create what a what higher low here, higher low, then before what creating a market. You can see before breaking this, which is BOS, the market structure broken it and then started what tanking down. You can see it. So that's just it for what a downtrend. See, watch now. Let's draw our trend line. If if this chart, if this chart, this particular part, this part has not happened, if you draw your trend line will be like this. You can see this is how your trend line will be. So markets will give you this high and what the second touch, and market broke it and came back to retest and what pushes up and came back to retest again and then pushes up. You'll be like, ah, no, market has broken its trend. It's no longer a downtrend, it's not in an uptrend. But see what market did. Market what created, keep creating. This is the current what higher low. The market has not broken this higher low. You can see this high it created has not broken this higher low. So that makes what this one still a valid one and this still a valid one, and created a low that is what lower than this one, and what created what equal high with this before coming down to create equal low with this, and what pushes up, which is correctional move to create what a lower high, and then what do you see? Push to the downside. That's it. What with the what with downtrend. So your trend line can be telling you that market has broken the trend, so let's look for a buy, let's look for a buy. That's why you are advised to only buy at what the end of a correctional move. So you have to wait for market to do whatever it wants to do here before you you sell at the end of the correctional move. That's that for a downtrend market structure. Let's look for a proper uptrend. This is for an uptrend, so trend line. I showed you these two will be enough. So then the market what came to create what correctional move, which is what the lower high. This is the low, gave birth to impulsive move, higher high, that's what higher than this previous high, and came back to give us a higher low and pushes up to what give us a higher high here, and correctional moves, you understand, which gave us a higher low, a lower high, sorry to say. It's the same thing. You can see lower high, then what this it only broke this with weak, then weak downward to form equal low here, and before what pushing up to to give us what. For me, I would take everything here as what impulsive move from this point to what this point. So then I will pick this as our current higher high. Let me just label it higher high. This will be our current higher high. This is our current higher high. Then where will now be our current lower high? This lower high. You can see this is our current lower high. Then where will be our next higher high? This will be our next higher high. Then what our next lower high? This will be our next lower high. And this place they came to create what equal high. You can see market wants to change in its trends now. The market what created its equal high. You can see equal high here pushes down to create a low, and let me use this my patch. So market what created this, pushes up equal high, then pushes down to create a low, and what equal high, then what equal low, and what you can see this low is a bit lower than this current high. So This now becomes what? Our lower high. Then what do you see next? Market what? Broke what? This to break this low, then break this low. Now market has changes its trend, just as we explained on the what? On the template, on the textbook template. That's what market did here. You can see it break this low it created and break this low. So this is the equal low. You can see market broke this and market what came to what? Break this. So market break this and market break this. Remember I told you that for me, if market break two lows, then I will know that market has what? Changes its trend. Why some people will want market to break three lows, why some will just want market to break one low. But for me, I want market to break two lows. So market break this one low and this second one. And what do you see? A retest of this low it broke from. A retest of it and will start tanking down. You can see that's that with market structure. Okay, now let's plot our trend line on this. These are our trend line from the low, recent low, which is recent active low toward this upside. You can see for this place, market will keep respecting our what? Our trend line. Market keep respecting our trend line. You can see from here, pushes up, came back to respect the trend line, pushes up, came back to respect trend line, pushes up, came back to it until it finally break the trend line and what? Retest. You can see break of the trend line, retest, and will start what? Tanking down. That's that for it. One thing again you have to understand is that, let me make this here. Okay, see on this lower or this downtrend. So you can see if a carpenter is working and the hammer he uses to work fell down from his hand or it broke, that does not mean that the job will not be done. You understand? The carpenter will always get another hammer to complete the job, or tell somebody to please give me another hammer to what? Complete what? The job. That is what. So the market is pushing down. So when it gets to here, the hammer fell off the carpenter's hand, and what? The carpenter requests for another hammer to complete what? The job, which is what? Now becomes what? A job well done to the downside. I trust you understand this now. That's that for that. Okay, let's look for a ranging market. Let's look for a ranging market. You can see what happened here. In an uptrend, market will keep trending up. See, market pushes down, pushes down. If you plot your trend line, this will be your typical trend line. This will be your typical trend line from this point to this side. Let's just say, okay, let's use this one. If this place is here to form, you can see market broke the chain. We have one touch, two touch, third touch. Market broke it, came back almost with test, pushes down. But market still what? Still what? Keep pushing up, keep pushing up. You can see what market did. It came back to retest this low here. You can see this low it created here. Market came back to retest this low. This low market created. It came back to retest this low and what? Start pushing up. You can see the hammer fell from the capital's hand, and the capital had to beg for another hammer or had to buy another hammer to get the job was done. You can see it. I just want to show you. You've even seen equals high, equal high. Yes, you've seen it. This equal high. So from here to here is what? A ranging market. This equal low, then equal high, and this is what? A higher low. You can see that's that for what? For market structure. Now let me show you the major structure and what the minor structure. This is the major structure. You can see the major structure here. And now let's identify the minor structure. The minor structure are what structure inside the major what structure. If you say these are our highs, higher high, higher low, then let me use the bar chart to differentiate it clearly so that we'll understand. This is it. We say our low that gave birth to what? High, lower high, higher high, lower high. I won't take this, I will come and take this. Okay. If we take this, no, I won't take anyone there. I won't take anyone within this zone. I will take this. Higher high, lower high, higher high, lower high. Then we have equal high. Then we have equal high, equal low, equal high, and came to form what? A low and what? A high, and came to form what? A lower low and what? We say this what? A higher low and give us what? A lower low, a higher low, and then give us what? This what? Lower low. So now within between this point, this end of this correctional to this end of the impulsive move, you can see other moves here. These are what called the minor structure. Now let's go to the lower time frame. Remember this what 4 hours time frame, and for the day trader their major structure is the daily and what 4 hours. And for me, my major structure is daily 4 hours and most time 1 hour, but I do use most time my 1 hour as minor, my as minor, and 15 minutes as minor most time, but in most cases I use my 1 hour as what measure. So why for swing trader their measure is from monthly, weekly, and daily, and the minor is what 4 hours, and they take their entry within 1 hour, 4 hours as well. So now let's move down to for 1 hour where we will see all this move clearly, or we move down to 15 minutes where you see them clearly. So let's move down to 1 hour. I think it will be best I put boss at the end, beginning of what the correctional and or the impulsive move, so we can identify them who get what the lower time frame. So let's take this one. Then here, let's put boss so that we can identify it. Always remember that it's a zone. It's a zone. So let's put boss. You can see how put why I just want to make this what across these three, then this across these two, then this one gave birth to this low, and this just for us to identify the minor zone and to know what we are doing. This is it. Okay, now let's move to 1 hour time frame. This is it on 1 hour time frame. You can see this is where the low that gave birth to this high. You can see. So these are the structure inside. You can see some structure inside. You can see structure inside this place. From this point to this point, you can see another structure here. You can see another one here. You can see this one. These are known as what? The minor what? Structure. So the reason why you can't spot them clearly here on this 1 hour is because 4 hours, 4 1 hour candle makes one 4 hour candle. That's why you can't really spot them clearly here. So if we now move to 15 minutes, so you'll be able to see the difference between here and here. You will spot a lot of. Let's just move to 15 minutes. You can see that's that. For look at the equal highs, this and this, the equal low, this and this. You can see. You can see the range. There's also what a trend line here. There's also a trend line here to the downside, which created. Let's just start from. Let's go to the beginning where it all started from. This is the low from the 4 hours, which is the major time frame. This is the low. You can see what market did from here to this point. We have what a trend line that crosses from here to here. You can see. So this on 15 minutes. So we have a trend line. We also have what structures inside there. Look at this structure. Let me delete this. Look at this structure. You have your highs, you have your low, you have your highs, you have your low here, you have your highs, then equal low, then what this high broke this one, so higher high, then what equal low, which makes it what 1 2 3 touch, which is then move up to here, another to this point high here, then created what this low. So this is the high, created this low, then give us another high and came back to give us equal low, then push up again. You can see multiple, you can see then these are what called the minor structure inside what the major what structure. With this structure, you'll be able to, because whenever you want to figure out when or where the market is about to change its trend, or where the market says okay, the the correctional moves is enough and market is about to move impulsively, you have to come to what the minor what structure, which is a lower time frame. That is where you'll be able to identify it clearly, to see some candle moves, and if candle is breaking structure there on the lower time frame, then you'll be able to know that okay, market is about to what change from this correctional move down to the impulsive. Remember, from this point to here is our impulsive move, and from here to here is our correction. So we were told to buy at the end of what correctional, and see what market did. Market created this low and pushes up, created what, an equal low, and what, created a high that break this what, this high here. We've had one break, then pushes up again, pushes up, then created what, a low here, and created a high that what, that break this other high. So that's to tell you that the market what is has stopped from what, the correctional moves, and is now pushing what, to the upside. So you'll be able to what, to look for a buy from this point. And if you put your horizontal ray here, you will see this is a high from the correctional moves. You can see how the market broke above this. We have what, one high, this one, market broke this high, created what, a high here, which brought down this low, and the market was broke this high, this minor high, and pushes up to what, give us another high that break this what, this high, and what, came back to retest all this high it broke down for, came back to retest it and pushes up. You can see how, so it is on your lower time frame, which is your minor trend. That is where you spot when the market is about to change its trend. Is not on the major time frame. No, you spot it so easily on the what, on the lower time frame, when the minor trend is breaking its high, that's when you spot it. Okay, since the market has broken two highs here, then we should be looking for what, a buy at the end of what, the correctional moves. And now let's go back to, you can see a lot of push up, push down, push up, push down. These are what, impulsive moves. These are impulsive move, push up, push down, push up, push down, push up, push down, push up. These are what, impulsive, then what, correctional. So this is the end of the correctional moves, then what, spike to the upside. You can see how this on the minor time frame, how it broke this high, it broke this high, it created a high here on its own, it came downward, pushes up to break its own high, and finally break this high here again, and came backward to retest and pushes up, came back again, and what do we see, boom, to the upside. So these are the triple top, triple bottom, double bottom we saw there. And when market is about to change, so this was impulsive move to the downside, and what, correctional. See what market did again at the end of this correctional, pushes up, came back, pushes up, came back, what, to break its low. Market will start breaking its low. It gave us what, let me use the patch here. So at the end of this correctional, so we already have this as what, as our low, our first low, and gave us this high. It created a low and created equal higher, and created a low that broke this one, this low. Okay, one, remember it is too low. I just want it to break too low, then I will what, look for an entry point. One, then what, created what, a lower, a higher low, and created a low that broke this other one. So we've broken what, two lows. This is one, two, then boom. So the market broke this one, broke this two, and what, finally break this one, so what do we see, push what, to the downside. So immediately it broke one, two, put your horizontal ray here. You can see when market finally broke this, it came back to retest again this level, and what, consolidate within this range, and then pushes down and pushes down to the downside. That's how it is. Okay, now market has came to this point, created a higher lows, lower, higher lower lows, higher lows, higher lows, higher lows. So market came down to this point, created a higher lows, higher lows. The reason why it's creating higher lows is what, is at its correctional moves. So, and it gave us a spike that broke all these lows, just one spike, or to give us what, an impulsive moves. I trust you understand it, and as we move on, you will see how to spot an easy entry on these zones, within the zone which you've marked out, how to spot easy entries as we move.